In a surprising yet significant development, the Federal Capital Territory FCT has overtaken Lagos as the leading destination for foreign investment into Nigeria. This revelation comes from the latest capital importation report for the first quarter of 2025 released by the National Bureau of Statistics (NBS). According to the NBS, the FCT attracted a whopping $3.04 billion in foreign investments, surpassing Lagos, which brought in $2.54 billion. The next in line is Ogun State with $7.95 million, Oyo State with $7.81 million, and Kaduna trailing with $4.06 million. This shift raises questions about investment trends, regional competitiveness, and the evolving economic landscape of Nigeria. On the program today, we'll seek to dig deep into what this means for the nation's economy, the sectors attracting the most capital, and what states can do to become more investment-friendly. Thanks for joining us on Nigeria Today. I'm Eucharia Clinton. Now with me in the studio is Dr. Niyi Akinshiju. He's a financial and investment expert. It's a pleasure to have you on Nigeria Today. Doc.
Thanks so much for having me. It's a pleasure.
Looking at the report of the NBS talking about the capital importation into Nigeria, what does this really reveal about Nigeria investment climate for the first quarter of 2025?
Well, it's good news. When you have investors directing their investments or their capital in foreign currency into a particular jurisdiction, one is an expression of confidence in that jurisdiction. The second is an expression of positive earnings, positive returns, because that confidence is also anchored on the fact that they are investing and they are sure of positive returns, but not just about positive returns, they are sure of exiting when they are ready to exit, especially when you look at the nature of the capital that had been imported into the country in the first quarter of 2025. It's more of the portfolio investments, investors that are interested in the money market, the equity market mostly. And well, that category or the categorization of that investment is usually described as hot money because it seeks profits and but where it seeks profits, it seeks the guarantee of exit when it wants to exit. It exits at a moment's notice, and so therefore sometimes it may be considered not too reliable source of foreign investment, because what it does principally is to exploit opportunities within a jurisdiction for higher earnings, for higher revenues. But the truth of the matter is that if a jurisdiction does not also have the confidence of this class of foreign investors, it is considered as a jurisdiction of low economic capacity and not exactly trustworthy in terms of its transactional values. So first, it's the precursor. When you have foreign investors, foreign portfolios investors come into a jurisdiction, is the precursor of other forms of investments coming into that jurisdiction, knowing that the foreign investors have shown the fact that they can come in and they can exit. It will send signal to the other part of the world, to global investors, that particular jurisdiction is a reliable jurisdiction. And of course, when you have foreign inflows like we have seen, it helps enhance the jurisdictional foreign reserve, which is also important for confidence building across the foreign investment segments across the globe.
Okay, still speaking on that, Dr. Akinshiju, what domestic policies or reforms would you say influence the result of this survey?
Principally, we are seeing 2 or 3 different policies that have impacted the markets. The harmonization of the foreign exchange windows, which now the naira is seen to be trading at near its real value, rather than when it was suppressed, when we were subsidizing the transaction or the exchange rates of naira to other currencies. So the investors are seeing that what they bring in at currency exchange rates is near the value they think is proper or appropriate to transact business in Nigeria. So that is one. Then 2, because of this appropriate valuation, the inflow had also enhanced activities in the capital market, either at the money market level, because at the money market level, we have seen a situation where the policy position of the Central Bank of Nigeria, the tightening, that's the money tightening policy, had shown that if you bring your money into the Nigerian economic jurisdiction, you would have what is called real positive returns, rather than the negative returns. Positive returns relates to the ratio of the inflation rates and earnings from whatever investment is brought into the economy. So, as it were, we have seen a lower inflation rates at 20. It had been lower than 25% since January, 2025, and now it's even at 22 by 22 in April, as it were, or in May. So the policy rate is 27.5%. That's the benchmark MPR policy rate, and to that extent, it means that the trader that comes into Nigeria, with his dollars, knows that when he's exiting near the transactional value of what he had brought in, or even higher, as it were. So the instrument of choice for investment of this kind are the bonds. I mean, the Nigerian Treasury bills, the central bank Treasury bills, and of course the Nigerian equity market. We are seeing how the equity market is leaping in bounds over the last 6 months, even starting from January. What is known as an overwhelming jump in the evaluation of the capital market from I think an average of 50-something trillion to a value of more than 80 trillion now. The Nigerian Stock Exchange Index is looking at more than 130,000 points. So we are seeing a lot of impressive valuation in the capital market and, of course, in the money market. So, and you can tie this one. You can tie this to the harmonization of the foreign exchange windows.
Thank you very much, Dr. Akinshiju. We are now being joined by Yushau Aliu. He's an economist and public affairs analyst. It's a pleasure to have you in Nigeria today.
Thank you very much. Thank you.
Yushau, we're talking about the capital importation of the first quarter of this year, 2025, the report that was just brought in by the NBS, indicating that we have $5.642 billion in the first quarter. This is an increase, a 67.12% increase as compared to the same period of 2024, which is $3.376 billion. That's for the first quarter of 2024. So I want to get your perspective on this. What do you think about this whole result?
The whole result has to be with the financial reforms that is ongoing, especially looking at the central bank MPR rate, which has been in the most conducive manner in the history of financial market, in the history of monetary adjustment so far. 27.65% is a very conducive rate at which many investors will be attracted. That is one. Second, when you look at the larger economic environment and you look at also the concept of economic reforms that are ongoing, which is favorable to many investors, especially when you check the financial market, and also you check also relatively the interventions by the bank at regular intervals. Two facts to me remain very significant. That is the MPR of the central bank. Second, also the attitude of political willingness to give a favorable condition for investors to invest. These are two major issues that has brought these changes. The third one has to do with also the security, that is unorthodox measures that has been taken. There is relatively more peaceful environment where investment is taking place in Lagos, Abuja, Kano, Port Harcourt. All these areas are relatively peaceful, and there is a lot of economic potential. Relatively also, we have to look at the size of the market itself, which attracts a lot of individuals who are having a taste in the economy, who are also having the effective demand to make use of what is being produced in the economy.
No, just like you just mentioned, Dr. Akinshiju also talked about some policies and, of course, the reforms that could have influenced this.
Yeah.
So, but then, what role do interest rates, inflation, exchange rate fluctuations play in shaping capital inflow trends?
I am having a different opinion as regard to inflation. Inflation is reduced because of the size of the survey, which has been conducted by the Bureau of Statistics, probably as a result of rebasing the economy. We have that shift. But remember, there was some adjustment in terms of income to several Nigerians, and there is also an addition to a lot of resources to the state, which give them more opportunity to invest in critical infrastructures. And this also has helped, so that, because, you know, investment, if you are to invest in energy, you have to provide a conducive environment where energy can be sourced, either hydraulic or solar or any other form of energy. So that increase in resources in the hands of state has also give rise to many states to invest in critical infrastructure, and also to allow, to call for investors. Take, for instance, Kaduna State. They have sourced a lot of international funding at different categories. Also, you look at Lagos because of the expansion, the renewal of our airports, and that also give confidence to a lot of investors. And what is more emphatic in nature is that once you have a relatively stable price regime, you attract people, because at every point in time they are aware of their investment, and they are also aware of outcome of their investment.
Okay, back to you, Dr. Akinshiju. We see the FCT at the top of this. Usually it used to be Lagos, of course, but now we have the FCT being at the top. Now, what exactly played out here?
Well, we first need to situate the targets of this inquiry. And as I noted earlier, the targets are the financial sector and, of course, the capital markets. What that tells you, why Lagos was always the major destination of foreign investment, was that you had the clustering of financial sector, banks, discount houses, stock exchange, and all that in Lagos. So there was a general direction of the inflow into Lagos. Now, don't forget that Abuja houses the Central Bank of Nigeria. So what I am thinking is that there would have been a huge inflow into the Nigerian treasury bills, you know, by the as auctioned and managed by the Central Bank of Nigeria, you know. So to that extent, it would appear that two things two things are the major facilitators. The money market instruments, treasury bills especially, which has a huge returns, which has a huge positive real returns. And we have to underline that, positive real returns. There is a major attraction for foreign investors everywhere in the world, where either you are questioning the basis of your published inflation rate or not. What concerns them is that there should be a positive relationship between their investment and inflation rate. Once inflation rate is higher than what they are earning, on the instrument they are investing in, they are discouraged from investing. So, for instance, if inflation is at 30%, and their earnings on the treasury bills, for instance, is less than 25%, the relationship becomes negative, But where the inflation rate is 22.2% as it were, and their aggregate earning by the time they are investing, the period they are investing, is about 25%. It's for them, they are making a earning that is higher than the inflation rate. So that is a positive real return, So to a large extent, I think the CBN would have been a major recipient of the foreign inflow. That is one. Then two, don't forget that there's also the capitalization of banks ongoing. And foreign investors will also be targeting the shares and all other forms of investment, in the banking sector. So to a large extent, that some of this will also be routed through the CBN. So I think to a large extent, it's a CBN thing for this quarter, for the first quarter 2025. But again, we also need to observe the fact that the kind of foreign investment that is more desirable is the foreign investment that goes into equities. Now, I'm not talking about stock market now, into equities, into industries, the FDIs in the real sense of it, that are not hot money, they don't exit the jurisdiction at the moment and all that. They come, establish companies, they come, establish business concern and all that. In the first quarter of 2025, I think the total sum of investment that flew into this segments of the economy was less than about $166 million thereabout. So you cannot compare that to the more than $4 billion that went into the capital market and the money market.
Thank you so much. Now back to you, Yushau. Just like you rightly mentioned, it's more of portfolio investment here. Now we have $126 million as the foreign direct investment. What does this say of the investors' confidence?
It says a lot, because investors are risk takers, and at every point in time they are investing for gains. And these gains has to do with the economic environment. And when you mention economic environment, it has to do with the economic policies, that's the monetary policies, and at the same time fiscal policies. Because once taxes are increased, it's eroding their profit. So it depends on type of tax that is associated with that economic environment. So, but however, this large sum of over 126 billion inflows has to do more or less with the monetary authorities' adjustment of different favorable conditions that attract gains to investors. Those in diaspora has also played a greater role, because they have come into the environment, they have studied the environment, and they have studied where investment is critical, and that is why a lot of them are now helping the economy, helping those investors to bring into the economy resources. Take, for instance, Diaspora City that is located in Abuja. If you have Diaspora City and those Nigerians in diaspora encourage investment, now these are personal gains to those who are interested in investing in housing. So, and also it goes critically to all sectors of the economy. Remember, this concept of creative economy has brought about multiple collaborations, partnership, and a lot of economic integrations, and that also assisted. Let me give you under critical, under creative economy, the influence of the arts and crafts investment in Nigeria has increased because multiple investors who are not even aware of the potentials of creative industry are now beginning to understand that there is more to invest, there is also more to do.
What's he talking about? That? What more can be done to encourage more of, the FDI?
Friendly economic policies that will attract investment, because investment is your own preparation to receive them. That is the favorable condition you attach to FDIs, definitely it will come. But above all is to bring additional security to the economy. The narratives on security has to be improving on daily basis, and that will also improve the confidence of any investor. The second aspect at which will attract more investment is the energy reform embarked by the government. So once you have additional supply, even if you have relatively stable prices of energy, what is more important is the supply of energy. And that supply has to do with a lot of government policies. I'm happy. Last year in 2024, January, President Bola Ahmed Tinubu has encouraged that Siemens is coming to invest. So these are some of the things that are coming into the economy, and if we can put a lot of pressure or a lot of confidence in them, definitely it will add value.
Okay, Dr. Akinshiju, tell us, how can local entrepreneurs benefit from, increased capital importation?
Well, it's what increased capital importation does to the economy is to provide more access to foreign exchange, basically. If we are seeing upsurge in the foreign reserve, one of the reasons, aside our own aggregate collections from our exports, it's a foreign inflow. So today, as of today, we are near. We are even more than $40 billion in our reserve. Those are indications of the fact that more dollars, more foreign currencies, more foreign exchange are coming into the port. And of course, don't also forget that most industries, manufacturing companies, and all that in Nigeria depend heavily on our foreign reserve to secure their raw materials and equipments from machines and equipment from abroad. So when you have a robust foreign reserve, it makes it easier to access funds at a cheaper rate, and you can also see the foreign exchange rates, playing some balancing acts over the last 2 months. You see that we have left the 600 600 rates. We are now under the 1,000. We are now between the 1,520 and 560 rates.
Thank you very much, Dr. Niyi Akinshiju, a financial and investment expert. Thank you so much for sharing your thoughts with us.
Thank you.
And also in the studio, we had Yusha Aliu, an economist and a public affairs analyst. Thank you so much for coming.
Thank you very much. Thank you.
And thank you for being part of the program. I'm Mikaria Clinton. Goodbye.